What's up, guys? Mike. Risk to reward sounds smart until you realize it's the very thing that most people are taught that keeps most traders broke and going around in a circle. Blowing accounts, risk to reward, paper cut, bad habits, blown account. I'm going to show you how we flip the script with dynamic money management and how you can use it to get profitable in 30 days or less. So before I teach you the strategy, before I go into dynamic money management, which is the secret, and you need to understand it if you're going to scale your account and get out of trading hell. But you got to understand where it comes from. You need to understand the background because there is a floating lie that has been going around the trading world for decades. And it's been keeping traders stuck for a long time. And that is only risk 1% per trade. Have you heard this? Only risk 1% per trade. Now, is that safe? Sure. But safe doesn't scale. Safe doesn't get your account from negative to positive. That rule protects beginner traders. And that's fine. When you first start out, you want to just survive, man. Don't even risk 1%, risk 0.1%, you know? But if you want to grow your account, you need to think like a pro. Pro traders don't treat every setup the same. They know the difference between an A setup, a B setup, and a C setup. Now, if I were to ask you, with whatever strategy you're messing around with right now, what is an A setup for you? Because you're supposed to know this and size up. Are you confident enough to do that? What's a C setup for you? You scale down. Or you just skip it entirely. So, you can't lose what's not in the pot. One of my favorite movies, Rounders. Love that movie. Matt Damon, the good guy. Let's go. The risk is not the same on every trade if you want to scale your account. It can't be. Okay? And this is where most traders just blow it because they end up risking the same. Every single trade, regardless of the quality, that's like literally betting your life savings on a coin flip. But dynamic money management, what I'm going to show you, changes the game because it lets you scale in with confidence based on conviction, based on a trading idea, not an entry model. Professional traders do not YOLO into the market with full size on an entry. They know when to go hard and when to go soft. And professional traders, I want you to think about hedge funds. I want you to think about market makers. They ladder in. What is laddering? Well, a lot of people call this dollar cost averaging, okay? Now, those of you that don't know me, real quick, take a step back. I'm Mike. I've been trading for 8 years. 4 of those years sucked. $180,000 I spent trying to get profitable. I met someone who showed me dynamic money management, showed me hedging, actually the art of hedging. I used that to become profitable when I first started. It's a game changer. And that led me down the road of being able to scale my account. I made multiple 7 figures, not just with day trading, but with crypto trading as well. I made more than 7 figures just with day trading. But I'm still a new trader, okay? I want to compare the two. Traditional risk to reward trading says one thing, ladder ordering and dynamic money management say another. So let me share the charts. Everything that I'm going over here is in a free roadmap, literally free training that I put together from A to Z covering all of this. If you want to learn that, the link is in the description. Join the community and take your trading to the next level, okay? With a real strategy, meaning it's not just an entry model. So traditional, let's just go over here. Traditionally, you would learn something like this. This is called risk to reward. Risk 1 to make 2. That means you're risking 1, you'll only lose a little. You're comfortable with that, right? You're not risking your entire portfolio. Only 1%. 1 shot, 1 kill. Sounds clean. Sounds real clean, right? Until price does something like this. You're feeling good. You're feeling really good. Oh, I'm not feeling good. I'm feeling better. Not feeling good. I'm feeling really good. Oh my gosh. Oh, boom. Till that happens. And you know what ends up happening with this? Here's what ends up happening with this, right? this becomes your life. It just stopped out time and time again. And this is the experience that most traders have. Okay. And then you try to do something like make it all back in one shot. This is like trading hell right here. Paper cut after paper cut after paper cut until your account is blown. This is the nightmare that most traders live in. This is the traditional way of trading. Do you agree? Is this not the truth? This is what most people experience. And then what? You get frustrated, try to make it back. I'm all in. Boom, account gets blown. Oh man, I got to make it back. I know I have this one strategy I've been following, but I got to find more setups. So you overtrade. Boom, you blow your account. Right? Oh man, I made an accident. I didn't mean to risk that much on that trade and blow the prop account again. And you blow your account. That's traditional, right? Now watch this. Let me show you how easy it is to show you a profitability scenario with dollar cost averaging. You guys ready? Watch this. I'm not even going to try. I'm not even going to try, and you'll see how easy this is. And totally random, not edited. I'm not editing this video. Okay, ready? We're going to zoom out. Let me go to a 1 hour time frame. What do you think? What direction is the market going, guys? Up or down? Is it going up or down? Now, inherently, the Nasdaq has a built-in edge. Isn't that beautiful? It's built in. What direction has it gone the last 100 years, guys? Gals? What direction? It's a built-in edge. Why would I want to trade anything else? You guys that trade gold, all this stuff. I mean, Bitcoin, I actually agree with. I mean, that's a built-in edge too. It's up, right? But the Nasdaq is up and to the right. It's got a little bit more respectability when it comes to the morning session, we'll call it. You'll see, I'm going to roll out the orb later. But look, watch. I just buy. That's it. Say I have $100,000, all right, in this account, because I can't just do it and say, you know, I got to define an amount, all right, 100K. Watch this, guys. Let's just play a price. I'm going to buy and sell as price is moving on the chart. Yeah, that's nice. $1,900, 2,000, 2% right there. You know, looking pretty nice, 3-4%. Oh, it just keeps climbing. Yeah, when I think there's a reversal happening of some sort, I might let it come back down. Yeah, I'll do it now. I'll take my little $4,000, let price come back, see if I get a better deal. Let's see. That looks like a pretty good place. I'm just going to buy. We're still in an uptrend. Hasn't really broken higher time frame, like a 4 hour or daily, right? Now, what's crazy about structure is that it's lagging. Watch this, guys. There's no entry model. I'm just playing price out. Okay, let's keep it going. Let's see what we can do right here. Oh, I think it's going to come back. I just think it's going to come back. No big deal, right? There's some guys that just teach like, yeah, just get in whenever you feel like it, whatever you think. That's kind of the idea here, but I want to show you something. You know, I think we could be going up, and now we're breaking structure down. I think we're going down a little bit further. How about that? I'm just going to sell a little bit. Now that's against what I'm seeing on the overall trend here, right? So I better be careful. Boom, I'm gonna take a little bit. Now what? Okay, now maybe we go back up. Let's see. I'll wait for some structure, some momentum. See the impulses down. I'm waiting for an impulse up. See that impulse up? I'll get in right there. Oh, nice little impulse back down. That's okay. Because guess what? I have a $100,000 account. And I'm gonna wait for the next impulse up. And I'm going to just get in again. Stay with me because I'm going to show you. This is how the banks do it. I'll get in again right there. Increasing my risk a little bit. Yes. Enough to where when I get to break even, I can deleverage just like that. And now we'll see if I can get back up there. All right, I'll take my profit right there. I don't even have an entry model. Bros and bras. Now, does this work for your prop firm? No. I get that. All right. In general, if I were to just buy, right, and I could just dollar cost average whenever the market dipped and I had unlimited funds, obviously the NASDAQ has a built-in edge. I'm going to be in profit someday. I mean, I know it, right? So now that we're understanding that dollar cost averaging has a much higher win rate and much higher profit factor. Why does that have a higher profit factor? Because if I were to average my position, say I want to just buy right here, see if I can get price to go against me again. The profit factor comes from how much profit you're winning compared to how much you're losing. Okay. Your profit factor has nothing to do with a Sharpe ratio, which is basically saying, oh, your winners are not as big as your losers. Your losers are bigger. That would be a negative Sharpe ratio. But guess what? If you have a high hit rate, high win rate, it doesn't even matter. Say I have an 80% win rate with the negative Sharpe ratio, meaning my losers are bigger than my winners, I'm still winning. So now that we understand a little bit about ladder ordering and kind of like the method of the madness, which is like you don't have to have a perfect entry. What if you did have a good entry? What if there was a model that showed you really good entries and it wasn't complicated? You didn't have to be a rocket scientist to figure it out. And that leads me to the orb with dynamic money management that I'm going to show you right now, and the crazy indicator that you see on your screen, which started out as kind of a joke for me. I'm not even gonna lie. Last year, I didn't trade with an indicator. I was trading a strategy called the unicorn strategy. I made some money with it, turned 98,000 into about, well, a little over 170. So I did pretty well. I did okay. But this is ridiculous. What I'm gonna show you now is on another level. I've had 6 red days this year. And for those of you that don't know me, guess what? I do it live, man. I can't hide, because if I hid, my community would see the video. They'd be like, yo, you're not telling the truth, bro. You've had 20 red days. You're not a profitable trade. I'm not profitable in your group. What? But that's not what's happening at all. In fact, take a look. Take a look real quick. Just take a look real quick. Day 16, and I'm funded with 100% win rate. First post, right? Keep going down here. I'm going to scroll, and you can see Green Wednesday, past evals, 8 for 8. There isn't any losses in here over the past 14 days from live stream. That's a fact. Now, I'm not saying people don't do their own thing and maybe have a loss here and there. But do you see questions that say, man, this is tough. I just don't understand it. I wish somebody could help me, still trying to get profitable, anything like that? We have people that have been trading with us for a couple of years now in here, 675 people. You don't think you'd see that by now? Look, I'll just keep going. Look at that. You pause the screen and read some of these, man. Is what I'm saying to you BS? No, it's not BS. There's plenty of space for us to win together. Isn't that cool? Plenty of room in the market for us to win together. So if you're trying to get profitable, I'm showing you an easy way to do it. It's just, does it fit with you and your personality? That's the key, man. Because I can show you many different profitable strategies. There's a lot of talented traders that have different methods, and this is just mine. And it just happens to work out really nice. So look, the first step is to map out the high and the low of the 15-minute range. So this is what's known right now. It's getting pretty popular, actually. But there's a lot of different styles of people trading the orb. You might have heard of this opening range breakout, right? Very popular right now. A lot of professional traders have used this. This has been around for decades, nothing new. But what if we introduced ladder ordering and we had a method to determine our setups? Remember grading our setups? We had a method to determine whether or not, okay, this was going to be an A setup, a B setup, or a C setup. What if we could do that? And what if we had the ability to ladder order multiple positions so that we weren't pigeonholed and forced into being a ninja trader all the time? Because most of the time, price runs against you. When it takes out the high time frame liquidity, it doesn't reverse. It's a fake out. And you get caught. And then you think it's still going to reverse and you hold for way too long. I know the drill. I've spoken to hundreds and hundreds and hundreds of traders. I know the drill. I know what people go through. And all you want is authenticity. That's all I wanted. So that's why I decided anything I show you here, I do live. I want to make that clear. My receipts are with my community. And I just want to make that clear. In fact, I even started a prop account. Here's my prop account. Boom. Those are my numbers since last Monday. I'm at 6K. I got 9K profit target to hit and pass. I have people in our trading community getting paid $10,000 a day, some of them, a day, prop trading. So I said, you know what, man, you can't make more than me. Hold on. So that's why I'm going down the prop road. And I will show you how to do that. We will show you how to do it. Legit. I want you to win. There's enough space, man. That's it. So what do we do after the 15-minute range? We wait for a 5-minute candle body to break. We take the trade, but we're not just taking it blind. We're taking it using the short tool, making sure our chart is on auto, making sure that TradingView sees the range that I want to see with the volume and taking into account that volume and dynamically giving me, watch when I put this on, a stop loss and take profit. Dynamically, right? So they're different. Then what I want to do is I want to say, okay, to grade this A, B, or C, I need to understand what that high time frame bias is. Remember what we talked about? And guess what? I don't use structure because it lags. So I zoom out. You can use a 21 EMA for this. Look at the chart and tell me, it's pretty even right now, to be honest with you, but tell me who's in control just looking at the center line. What is the most vertical impulse that you can see on the chart? Okay, now, if you're looking at the way I'm looking at it, it's pretty even. This is kind of a trick question. You know, I see some vertical impulse here, and then I see this vertical impulse here. So it's pretty even. This day was a little tricky because honestly, from A, B, or C, right? If I had these up here again, let me put these back up here. A, B, or C, I immediately cannot say it's an A because I can't determine who's in control. I think sellers maybe, but I do see buyers over here, right? I do see some selling action over here. But because of the question and the, non-clarity, you got to have clarity. You got to have clarity to have confidence, man. So A is out, okay? A is out. And that gives me B and C. So now what? Well, we broke the orb to the downside. Let's put price back on. We have a blue line. See this blue line? What does that tell us? It's curving. It's about to turn red, or at least gray. It tells us temporary momentum, our lower time frame momentum, right? So we need to make sure that that aligns with the break of the orb. What direction is this breaking in? Down, right? What direction is the line saying momentum's going in? Up. So does that align? No, that does not align, right? So because of that, B is out of the question. That leaves us with C. We have a C setup. So the C setup, okay, is a lower sizing. You determine your own sizing. But let's say A setup is 3 contracts, B setup is 2 contracts, C setup is 1. Okay, fine. It's a 1. So I still take it. Maybe I don't trade my cash account. I just trade the prop account. I don't know. I still take the trade. We're going short. Oh, come on. Come on, TradingView. Work on your back testing. All right. I know my sizing. However, let's say I had a lot of money. Let's say I had $100,000 in here, 200, 300,000, whatever it might be. I need to know where my invalidation zone is going to be. So instead of using a normal stop loss, I can use an invalidation zone. So I'm going to put that up here, right? Here's the inval zone. Why? Because it's outside the bands. It's away from price. And it's where I'm comfortable saying that if price gets there, I'm out. Ready? So check this out. Let's play price out a little bit. Now this would have hit your TP level. Now what could you do here? Well, I can't really take anything off of this trade, but you could, if you were sized up a little bit more, you could take a little bit off, try to get a runner. Let me show you what happens if, let's just say, this did not hit TP. Let's pretend our take profit was down here, our TP level. Now you might be looking to say, oh, this is a 1-to-1. It's not. Let me show you. It starts negative risk to reward, but watch how things change. Ready? So what does price do? Price moves up, okay, and closes above, I know it does, the center line. There it is, right? Our temporary daily bias is still down, right? That's 5-minute candle body broke. Because price closes above the center line, we can add to this position. So I will add. And guess what? If this were my TP level, it would be the same distance. So I would essentially just move this here. It would be one position, right? One position averaged in. There's my average position, right? And there you go. It's as simple as that. Now, watch this. I'm going to play price out kind of slower here because that next candle, look what it does. When I put my stop loss in the invalidation zone and have the TP here, let me just put this down a little bit. The risk to reward changes because what happens is once you get back to, let's say, a break-even standpoint, your risk to reward is closer, right? It becomes closer to your invalidation zone. So it's not a negative risk to reward most of the time. Most of the time, it's actually a much higher risk to reward than where it starts. Because as price is running in the opposite direction, you're adding to your position, you're laddering in, which is actually pulling your average entry point closer to your invalidation zone. But yet you're keeping the same distance, or you're taking a little off, like in this case, take 80% out and let the rest trail. So I could deleverage this position, watch what happens. Now I only have one contract, and now look at what happens with the risk to reward, especially if I'm trailing the rest. Let's play this out a little bit. There you go. So I turned what might have been a negative trade for a lot of people. Stop loss behind last candle wick, whatever. This happens all the time. And in fact, just to kind of prove the point, I'm going to go ahead and just do like a random bar. Just go random on the chart. Here we go. Okay. And I'm going to show you this in real time. I'm going to go kind of fast because I don't want to, people got a short attention span these days, but I do just want to show you what happens. All right. So what are we doing? We're waiting for the 5-minute candle body to break. Let's get there. Sometimes it takes a minute. Finally breaking down. Let's zoom out. Who's in control of this market? What do we want to see? We want to see 3 to 5 days. 3 to 5 days, guys. 3 to 5 days. That's it. You don't need to be looking 10 days in past, and 3 to 5 days, man. I mean, I can tell you right now, sellers are in control. So what do we have? What setup do we have? Look, A, B, or C. You decide. Price is breaking down below the orb. High time frame liquidity is down. Short term, the center band is gray, about to turn red. We pretty much know for a fact that the next candle, even if it's up, is going to be red. So this is an A setup. The only thing that I would say, and you'll learn this, you come inside the group, you'll learn, the only reason why I wouldn't give it an A+ is because the 15-minute range is inside of the bands, which basically means that we're inside of consolidation. It after an expansion, typically it widens out the bands, and if price action is inside of that, usually Asia or London in this case expanded, right? So you're inside of a consolidation range. So price is breaking that consolidation range down. At this point, we have our high time frame bias down. We have an A+ setup. How do we know where our invalidation zone is at? I don't even need that setup. I'm just going to show you. Well, we want to outside the bands, give a little bit of space. That's a little bit of a judgment call there. Little bit of your call. But somewhere out here looks reasonable. We show you how to measure stop loss. Boom. How do I know where the take profit is? I use auto. It's got all the volume in my visible range. And this will give me 38 points. So 38 points right in here is where I want to be taking my profit. Okay. Now I don't have to take all the profit. I could let her run a ride, baby. So maybe in this case, maybe I change this in real time. to only selling 2 contracts and keep 1. So let's go ahead and see if we can get a runner. This is an A+ setup. And if it runs against me, this is great because I can show you what happens if it runs against, which it is doing. We'll see. We'll see if it continues. There's the breakdown. Finally. Stop loss is way up here. I didn't get stopped. I wasn't even worried about it. I was about to add. This is a great day. A+ setup, babe. Let's go, right? So we pretty much hit the 38-point target right down here, 40-something points. I can take this now, and I can deleverage my position. Let's deleverage it by 1. See if we can get another push. Okay. We do. We wait. We wait. Now we use the shelf method to trail. Now that we have structure formed down below, we can actually pull our stop loss down here. And it would be going right here. I can deleverage again. Grab a little, take it, put it in the bag, baby. Deleverage again. Let's see if we get another push. We do. Okay. And there I'm stopped out. It's also towards the end of the day. Like I'd be maybe golfing or playing with my kids or doing something productive at that point. Once again, showing profit. Okay. How can I get away with this? Because my losers are so few. That's why. And what this allows me to do is scale positions while the odds are still on my side. Why are the odds on my side? Because I'm using multiple confluences. I'm using the high time frame momentum trick that I showed you. You don't even need to know structure to use that. And I'm also using a systematic approach to adding to positions, scaling my account by grading, and using dynamic money management. Here, sellers are still in control. Invalidation zone is up here. And it's over a series of trades that you're going to find your edge. So I'm giving this a better, this is an A setup as well. I already know it's going to be about 30 points. No, about 20. Another 115. Now look at the time. That was done in like 15 minutes, man. Is that not the dream life that you want to build? 15 minutes of trading and then you're done. Now, are there multiple positions that you could take using a stop loss? Because that might be on your mind. Maybe you're like, man, I don't know about this. I like the idea of using a stop loss. Okay, you could. And I do tons of back testing showing this method using a stop loss. In this case, here's another entry right here. Go short right there. This is another entry without adding to our position. Okay, boom, another win. There's reasons why this entry is valid. Do you understand? So you got to learn that. Okay, there's reasons why this entry would not be valid at the top of the band. And if I were in this first position and it went against me, there's reasons why I just want a stop loss and not use dynamic money management in a sense of ladder ordering later in the day. We only do that in the morning when there's volume. There's reasons for that. There's a reason behind it. The way I see it is, traditionally speaking, with the traditional risk to reward mentality, never trade against the trend. I agree with that. Never trade against the trend. That is true. However, you're finding your trend through structure. I'm finding my trend through momentum. Mine wins. More than yours, I promise. It wins. And the reason why is because structure gets broken all over the place. Look, go back to the chart. Look at how many times structure is broken all over the place. This is why professional traders use MAs. They don't use structure. Okay? I'm not saying they don't use structure for entry models. Okay? That's different. I'm saying for a bias. To determine your bias. So if you're still stuck in like structure hell, this is why. Because you're not using this, man. Like I could pretty much tell you, until we have an impulse up, we're going to be selling off. Like, I don't know what's about to happen. I'll play this out. I would bet the odds here are that we go down, even if we go up a little, because we haven't had a momentum shift to the upside yet. That's greater than what I'm seeing over here. Does that make sense? It's a little far, but it's still showing high time frame momentum down. And look what's playing out. I can pretty much guarantee that we're going to break these lows at some point. We'll let this play out, let that sink in. And if it doesn't, it needs to show that it's shifting. We need to see a vertical impulse, right? That is bigger than these selling impulses over to the left. It is those vertical impulse moves that dictate the true who's in control question. And the reason why that works, guys, gals, is because, do you understand, market makers are the only ones with the kind of money to create these vertical impulses like this. They're the only ones. And you want to be going with them, not against them. Okay, so down is the direction here. I'm waiting, even if look, this is a bunch of range taking forever. The drop is incoming. I'm pretty certain. Why? Because I'm playing the odds. Here we go, meeting those lows, about to break them. And because we've ranged here for so long, it's going to be one of two things. A nice move down or an impulse up and a change of direction. That's how it works. And by the way, we're on a 5-minute time frame. So this is just a couple of days that I'm playing out. It's not that much time. Okay. So with that being said, I'm going to go to 30-minute time frame, just see what happened. Now I'm super curious to see what happens here. On a 30-minute, you can see, oh, there's differences in who's in control. Yes, but you're looking at a much, much higher time frame. You don't need this time frame. You're a day trader, unless you're a swing trader. And that's different. Let's go back down to the 5 and see, did we get a vertical move to the upside? Okay, we did. So we were consolidating, and what did I tell you? Price was either going to dump or shift, and it shifted. So now we're looking for only buys. And guess what? In the Nasdaq, if you're trading the Nasdaq or indices, you're mostly going to be looking for buys. So it's either stick to what is working for you, if it's working for you, the tight little stop loss with a big reward, good luck, or develop dynamic money management skills like a professional gambler, because that's almost pretty much what you're doing as a day trader. Let me tell you something. If you think, like, it's one thing to invest, okay? But I want to be clear. If you are day trading, you're gambling. And to be a good gambler, like a good card player, even some of the best card players that are YouTubers, you might know some of them. One in particular is on my mind. Shout out to Rips. Dude is a professional gambler. Literally says that those skills pour over into his, trading. Now, I don't trade anything like Rips, okay? Or anybody that I know on YouTube, actually. And my whole thesis is, if it works so well, then you should be able to go to your community and just post about the wins in your community. Just because it worked for you, it doesn't mean that it's going to work for everyone else. I want to see what the other people you're teaching, their success. That's how I believe a coach in the trading industry should be judged, not by their own accomplishments, my opinion. And that's not because I haven't made billions. I mean, neither is a lot of these guys. Billions of dollars, some of them 7 figures. I've made 7 figures. That's one thing. And that's a challenging thing. I think that's, important to see, okay, you've had some success. But I think more importantly is what is the success of your students? How many of those have you turned into 6-figure or 7-figure traders, right? And so that's what the mission is inside of the Midas Touch. And this strategy has given me 6 red days all year doing it live. So the proof is in the pudding.